What if I told you that one of the biggest non-banking finance giants from India is finally going public after years of speculation, and you might miss it? Yes, I'm talking about the HDB Financial Services IPO, a subsidiary of HDFC Bank itself. But here's the big question. Is this a golden opportunity, or just overhyped noise? Let's break it down step by step. Section 1. What is HDB Financial? HDB Financial is not some small-time company. It's a major player in India's NBFC sector. Founded in 2007 and fully owned by HDFC Bank, HDB Financial offers personal loans, business loans, gold loans, and more. With over 1,300 branches and a presence in 24 states, it has a strong retail and SME footprint. But why is it going public now, after staying private for so long? Section 2. Why now? The timing strategy. Think about it. HDFC and HDFC Bank just completed their massive merger. Investor sentiment is bullish. The markets are recovering. And NBFCs like Muthoot and Bajaj Finance have already seen major stock rallies. This might be a strategic move to unlock value for shareholders and raise fresh capital for expansion. But don't jump in yet, let's talk numbers. Section 3. Key financials you need to know. Based on leaked data and market buzz, HDB Financial's revenue crossed 11,300 crore Indian rupees, with net profits around 1,300 crore Indian rupees in FY24. Its NPA ratio is lower than most NBFC peers, a positive sign. But valuations may come in at a price-to-book multiple of 3.54x, which might be slightly high for current market sentiment. Also, the IPO's size is estimated between 8,000 crore Indian rupees to 10,000 crore Indian rupees. That's big money. Section 4. Should you apply or skip? Pros and cons. White heavy checkmark pros. Backed by HDFC Bank, India's most trusted bank. Solid financials and consistent growth. Well-diversified product portfolio. Expansion into semi-urban India. Prohibited cons. Valuation could be stretched. Competition from digital-first NBFCs. Market volatility may impact listing gains. Gray market premiums still unclear at this point. Section 5. My verdict and what you should do. Here's my honest take. If you're a long-term investor looking to bet on India's credit growth, this IPO could be worth a serious look. But if you're only looking for quick listing gains, wait for the final price band and check the GMP before applying. Remember, IPO investing is not a lottery, it's a strategy. Don't apply blindly just because it's an HDFC brand. So, will you apply for the HDB IPO or skip it? Drop your thoughts in the comments. I reply to everyone. Speech balloons, smash that like button if this video helped you decide. Bell